Alright, it's another weekend. It's been another interesting week, certainly in the markets, from my point of view anyway. So let's have a look. Now, we always start, as you know, with silver. Silver is what I'm trading at the moment, what I've been trading for the last few weeks and months in expectation of the significant upside that many of us have wanted, and it's only been in the last few days it's looked like we might be on our way to getting it. Weeks and weeks and months of not getting it, but now we might have good reasons that we might anticipate that we will get it. We just got to overcome certain levels of resistance, like this. Let's take this one up. So the quarterly chart is especially interesting, and I posted this already on Twitter. And the reason it's especially interesting is because of where we are in relation to these big, thick blue lines, which again are duplicates of each other. 1, 2, 3, 4, 5, all duplicates of each other, and then the 1, 2 here, they're looking a bit like a flag, a bull flag that we might have just back tested here. And not only have we back tested this line coming down here, the top of the flag, we've also back tested this nice line of angle here that caught this top here, that caught this top here, that caught this low here, that was on the quarterly closes, that was the body of the doji, that caught this low here, and nearly got the high here, that caught the high close here, and it coincides and intersects with the top of that flag here. That's where we dumped into last quarter. We just nudged it again on the open of this quarter, and we've shot up, and it's been very nice. So it's looking good from the quarterly. Monthly, we've got some black lines on here that now on the monthly, capturing sort of this intermediate space. You can see it's tapping all these important points, so why not have it? Seems good enough to me. So this is the immediate resistance we're facing over 24.34, and we're going to 36. At least. I saw some crazy person on Twitter today sort of joking about, silver's going to go to $600. No, it's not. That's crazy. They were joking, but I think it's a few people have spotted a sort of the more bullish action, not only in this market but also in other markets that would be supportive of the case I'm making here. And we'll look at those in a little bit. So on the monthly, nothing special to look at. I mean, does that count as a positive divergence on price volume trend on the monthly? But I mean, price volume trend is shit on the monthly anyway. You really want it on a day-to-day basis. On the monthly, there's too much sub time frame action on lower time frames, I suppose. It just makes a mess of things. I don't really like price volume trend on anything other than the daily, to be honest. But what a fantastic October into November. You can see we've done a little dipperoo about halfway back into October's candle. We've had our retracement. Now it looks like we should be launching up. So in the immediate term, we would want to get to $26, $27, something like that. Again, on the way to 36. 40. We might get acceleration if we break out of here. I don't know. Weekly. So this was where we undercut the low from September, and we did it on positive momentum divergence. And you can see we're back at this key resistance that we identified already from the quarterly. It's so key. We had one shot at it on the weekly, and we pulled back, and now we're making our second shot at it. Hopefully the resistance is cleared. It's been emptied out of sell orders, and we're free to go up into again 26, 27 would be the general idea. And also, you'll see it on a lower time frame, but just to show on here, there's a back test. Trend line, breakout, back test. That was the action this week. It's especially clear on the like the 4 hour and things like that. Daily, how good does this look? Head, left shoulder, right shoulder. Personally, I was really hoping that it would only come down to like here or here. I didn't want to see us really go below like 23.50, 23.60, something like that. So I mean, the money I made on the way up here, because if I did buy down here, yes I did. The money I made on the run up, I sort of obliterated on the retracement because I used the additional money I made to increase my leverage. I thought we'd only have a teeny tiny pullback, and then we got a much deeper pullback. So yeah, sucks to be me. But they're very clear inverted head and shoulders. You can see we have this line of angle here: low, high, breakthrough, back test, low, low, shoot through, doji body, back test. So that once we pull back again intraday below this yellow line and then got back above it, it was buying time, and I've been buying again. I think I bought some down here and closed it out somewhere in this fuckery. You see the up tail and the down tail, the wick and the tail on this candle. I think this fuckery stopped me out, but I'm back in again. I can't remember exactly where from. I'm not going to open up my MT4 account to show you. But yeah, good times. Good times. Here we are on the 4 hour. There's that line of angle we were just looking at the daily. Above, below, back above. So it's from somewhere around here. Somewhere between 23.62 and like 23.88. I'm pretty heavily long again. And we're slowly chopping through these immediate resistances, and again we want to get into the 26-27 area as our next stop, our next port of call. No, there's my green arrow. Yeah, anything around here I was buying. I'm probably in from around 23.77, something like that. I just put that on as an aid memoir. That's not an actual buy order on Pro Real Time. I just like to chart on Pro Real Time because it's a fantastic charting package, and then I execute on MT4. You know. If you have access to Pro Real Time, get it. It is superb. And if your broker doesn't provide it, ask them. We can go down lower. Do our indicators show us anything useful on the 4 hour? Yeah, there was a divergence. No, don't do that. And there's more of the same. There's that deep spike down, and whew, up. Another inverted head and shoulder type thing here. Here we are right on the 15 minutes. And that was a nice close. There's the spike down. Yeah. So hopefully we can keep on going. So what else have we got that's supportive of our case? Well, if we look at gold in the daily, oh my goodness, look, would you look at that? Well, the lower bound of the channel, back tested, big time, big spike down, and also this is what's like a quarter now to another daily line. But again, it's got lots of touch points, it's intersecting lots of key points. Perfect back test, very precise. This is the upper rail projected from this high, and we just broke through it. We've sliced through it like a hot knife through butter. Let's start on the quarterly. Does this tell us anything? Other than we've stabilised, if you would take the midpoint of this distribution here from 10 years ago, if you would take like the midpoint of that distribution, come here, sort of. Yeah, as long as we're above that, I mean, unless you think we're coming back down to sort of $400, that looks like it's a launch pad to me. Subject to change. There we are on the monthly. There we are on the weekly. And the daily. So what was important really here was the back test, and then this move up is just crazy. It's a kind of a shame that silver didn't. It's got a strong look to it, but we've not broken these October highs, whereas gold has already. So maybe gold's outperforming. If we look at other anti-dollar assets, this is the euro on the daily. Big time bullish divergence on momentum. Double bottom in the histogram of ease of movement, combined with a building bullish divergence all the way from June, July. This obviously was a bad time to start buying, but well, it depends on your time frame. I mean, if the dollar's fucked, buying at €1, and 11. Sorry, $1.15 per. €1.15 per dollar will not look so bad if this is going to be something that continues at big time. What do you even say? Much better signal here, especially being at these lows. We look at the dollar. Yeah. I mean, it could still break out and go big time. It could be, why, we could be having a big time rally. Still kind of a worrying look. This reverse divergence. We are going up, but we are at a bit of resistance. But if we overcome it, we're going up to something completely absurd, like 111, something like that. But we're at an important resistance. We are. Well, the issue is we've been here a little bit, and is it getting a bit exhausted? We are at this fib channel line, which is long term. See if I can maximise pricing. See if we can find where it's coming from. And it is the 61.8% of. Yeah. So I've sort of imagined there's a higher high back here. And it's sort of there's sort of an element of best fit to it, but only just. I can't see the high back here, so I've just sort of put a gentle. It's sort of slightly gently above here, and then the 0% is designed to capture that, and that, and that, and then sort of the look of it. The 38 captures that, and that, and that, and that. It intersects these lows, it captures that, and that. It intersects, it captures. So there's an element of best fit. The 50% captures, intersects this whole fucking mess here. It's a high. It intersects the accumulation on this spike low. It's this exactly. So it fits enough for me. It's telling me that there's a decent chance these levels are meaningful and will hit. And that's where we are. We're hitting again on the 61.8%. And there we are, closer. We did make a marginal new high, so either this is exhausted and we're going to drop like a stone like everyone is waiting for, or maybe we are just going to go higher and higher and higher. At the very least in the near term, maybe in the spring we'll be back at 98, something like that. Yeah, so spring, summer, maybe we'll be at 98 and I will have regretted everything. Let's go with the daily. Yeah. Bonds. Now, I was telling you that each of these successive new lows was creating a decent spike and that this would be the next area, that this is from last week's video, more than last week's video, 2 weeks ago? Anyway, this was here before price filled it. This is not retrospective. Got our divergences going crazy all over the place. Barely new low. In price volume trend. And yeah, we just made a little low pop, low pop, flag, pop. So the new lows have stopped and we've gone into a stronger rally. So either we're going to be tired and wear out and come back down again, or we'll flag out for a little bit, keep going, or maybe just keep going. Those are always the possibilities. But presumptively bullish I would be looking to buy. And if real yields are still in the shitter, yields is whatever you want to call them, yields are still in the shitter, bond price is going up. Just like dollar going down, this going up would be good, presumptively, for silver. Uranium the beast. I'm still unbelievably fucked off that I called buy here. You can't imagine how fucked off I am. Yeah, but the good news is we might keep going up. We might go, even if we only get halfway back to this sort of weird frenzy. I mean, who wanted uranium that bad in 2011? I don't know. But if we get halfway back, I mean, that's another 4,500 points, something like that, you know. Yeah, but the time to buy was either down here, where I identified it, or on the retest of this top. Now is not a great time to buy. Unless you go down onto, you know, a much lower time frame and buy. You know, you could have bought here. You know, we're under these lows, filling the sort of vacuum of price action here. People got their orders in here. People got their orders in here, but this was a bit of a void, and we filled it and went up. So yeah. Depends what time frame you're looking at. And there's your bullish divergence. Let's look at dollar yen. It'd be nice if dollar yen shits itself. Yes, it's shitting itself. Fantastic. So where's this coming from? Yeah, these extremes here from back in 3 years ago. Would you believe it? 3 years ago, 2018, autumn of 2018, 3 years ago. This whole area here, and look, we just took it. We just wicked this level. You could have just had fistfuls of sell orders up here, and there was always going to be a reaction. Maybe not some sort of grand turning point that's going to make your fortune on the way back down, but you can guarantee there would have been a reaction. You could have just gone in there like a nutcase, like a hooligan. Like a trading hooligan, and just steel toe capped the fuck out of the dollar yen with sell orders. You know, this RSI is too big. We better save with these changes we're making. So I mean, hopefully this continues, and hopefully again this is excellent for silver. Look at semiconductors. It's madness. It's madness. Total madness. Well, the FTSE's finally broken out. And again, the FTSE is heavy in commodity and mining stocks and things like that. So it'll be interesting to see what happens if the American indices take a dump. The Nasdaq looks ready to take a dump. The S&P looks ready to take a dump. It'll be interesting to see what happens to the FTSE. Why am I saying horrible things about the Nasdaq? Because, well, on one level, just look at it. On another level, you may say that doesn't matter. All that matters is the printing press and the Fed and all that, and you're probably right. Here we go. Yeah, there we go on the weekly. So, I've best fitted, again, just eyeballing, just seeing where levels catch, a sort of a fib channel. The upper end is not attached to anything, but I've started my zero at the crash low of 2009, and then I've just extended it up until we get catches on the levels. Best fit. So the 11.4 catches. The 23.6 catches. The 38.2 catches. Whipsaw. The 50% catches. Hesitation, wicked into as a low. The 61.8%. As the higher you go, it starts to get a bit rougher, but yeah, it's cradling these lows. The 70.70, maybe that should be 70.0. Maybe it should be 70 and 700ths rather than 770. I don't know. But you see, it catches this high, this wick low, Yeah, 78.6. You get this distribution above it, and it dumps through it. It comes back, it back tests it. it's the spike. The spike's not so much with the close. The 88.6, it intersects, catches this high, it supports these bodies, and then we round underneath it. It frames the deviation. The 94.1, we catch this high, we slice through it, and we've just hit the 100%. So you can see most of these other levels have meant something, and it could all be crazy coincidence, crazy accidental, but given how extended the market is in general, I mean, look at this for start. I mean, just look at it. You know, if we are all going to shift into hard commodities and come back to a sort of a realer world and a realer environment after blowing everything up, we sort of it's hard assets time. Who's in real assets? You know, after this big paper-based blow up, then why not here? Why not here? You know, all these other levels have mattered, haven't they? So maybe it's my crazy imagination, or maybe it really does mean something. And if you look at that, my imaginary level, my 94.1, look how it catches, my 100, look at it. On the body, on the daily. You gotta be kidding me. I think it might mean something. And if it doesn't, it doesn't. You know, fuck's sake. But, yeah. So, little deviation. It maybe need a bigger deviation. Maybe we need to come up more on the daily and form sort of a rounded above it, like we saw with the rounding below the 88.6 line. Maybe we see a rounding above it. But anytime it's getting under, what's that, like 16,350, I would be worried that that's showing us that it's done with its deviations above the level and is now marking the start of a more pronounced down move. Or, alternatively, all that matters is the Fed and the printing press, and the Nasdaq is going to be at 20,000 by the end of next year. Something like that. There's not a whole bunch else to look at. I've remembered to bring up a few other charts, not like my breadth charts and things like that, but just supportive for the case of silver. Yeah, so we'll start with silver against the dollar. Here you can see against the dollar we're getting an inverse head and shoulders, left shoulder head, right shoulder. So once we've broken the neckline, we should go to well, this is like back up at 30. You know, if we're going to start performing again against the dollar, this low compared to this low on the RSI, that's a positive reversal. Strong candles closing. If you believe in the 50 MA, well, there it is. So it's got a good look to it. Silver against the dollar. Silver against stocks, look at this. Similar type thing. Head, left shoulder, right shoulder, building positive divergences. Yeah. And some nice closes. Let's go back further and see what happens. And we are at pretty immense lows against stocks. And again, look at this, the building positive divergences, the head, the left shoulder, the right shoulder. So we should see a period of improved performance against both the dollar and stocks, and we're also seeing a similar type of thing against commodities in general, of silver against commodities, the CRB index, against other commodities. Because all uranium, oil, soft commodities, wheat, coffee, cocoa, you name it, they're all going absolutely nuts. And the metals have been, well, silver has been a laggard. Other metals have done a bit better, done alright. And you can see we're getting this sort of, this look to it, where maybe we're done with shitting out against other commodities, and silver is about to go into a period of better performance. So, things have that sort of look to them. Does it mean it's going to happen? Yeah. I'm betting yes. That's what we're doing at the end of the day. It's not quite betting, but you can be slightly more It's not gambling, it's betting. We'll call it betting rather than gambling. I'm betting on silver having a good run, and I'm going to be looking to buy more. I've got a small short specs position. Where's the specs? There we go. I'm short from like 46.99. We'll see what Sunday, Monday brings. I mean, they may bring it up again higher, make a marginal new high, something like that. But just with the Nasdaq looking so horrible, and around that important level, I thought I had a bit of loose change in my account. Now I'd short a little bit of the S&P. But yeah. Where's... Is that what I want? No, that's not what I want. Where's volume on price? Oh, that's quite interesting. Maybe I'll look at these indicators later on, they look quite interesting, but for now I want volume on price levels. No, not in a new chart. Why 25 bars? Does it make... I'm not an expert on using volume by price. Like, why 25 bars? Like, what if I do... Oh. If I do like one bar. That tells me nothing. Why not 20? Why not 30? Or 33? They're getting a bit too small. Let's go for 25. Let's trust the defaults. Let's trust the default. So you see we had the big volume coming in here. I suppose this is the support level. We've come into here. We've gone back above it. So the next sort of level is going to be like 25 and a bit. The next level is going to be 26 and a bit. Next volume level is 27 and a bit. And then... You're watching me say just being idiotic now because I don't know what I'm talking about. I wonder if we do this on weekly. What does that look like? Wow. Look at this absolute void here. Now that is a void and a half. So the big volume look was here. And they took it down. And there was literally nothing. There was literally nothing down here. No selling. No selling at all. No green for buyers either, but so people were holding to get above here, I guess, and then they were selling up here, and then look where the selling wore off. I guess this was all the goobers buying like me. I'm trying to interpret this chart in the moment. I no idea really what any of this means. I'm literally guessing. So I'm going to say above 27.04 we go 36, and a good time will be had by all. And I'll buy a really nice house for cash in the posh part of where I live, and find a nice 20-year-old girl to have 10 children with me. Live the dream, guys. See you next week.